Welcome to Thoughts on Investing. Wow, this was one of those weeks that just gives you whiplash, The market got absolutely tossed around by political threats. We saw money flooding into safe havens like gold, and new tensions started flaring up with the Federal Reserve. It was chaotic. So let's get right into it and unpack what really happened.
But before we dive in, you know the drill, just a quick heads up. This explainer is strictly for educational purposes. It is not financial advice. Markets can be unpredictable, so please always do your own research before making any investment decisions.
Okay, so here's our game plan for today. We're going to start with that tariff threat that really dominated the headlines. Then we'll follow the money and see how investors reacted. After that, we'll look at the growing conflict with the Fed, touch on some inflation signals, and then we'll wrap it all up with the single biggest lesson from this crazy week.
So first up, let's talk about the main event, the tariff roller coaster. Honestly, the story of the entire week really begins and ends right here, with a single political headline that sent shockwaves through the global markets.
And what's just wild here is how fast everything happened. The week kicked off Monday with President Trump threatening brand new tariffs on Europe over a deal involving Greenland. Then, by the middle of the week, we started hearing whispers about a potential framework. And by Friday, the threat was basically gone, which triggered this huge relief rally. It was pure whiplash from start to finish.
And this slide really shows you the two completely different stories of the week, right? On one side, you had the threat. Markets dropped like a rock, fear spiked, and sectors like tech took a direct hit. But then on the other side, you have the relief. The second that pressure lifted, the S&P 500 and the NASDAQ just soared as investors rushed back in to buy the dip.
Okay, so that initial panic, it sent a lot of money running for the hills. So the next logical question is, where did it all go? Let's follow the money trail and see exactly where investors decided to run for cover. And yeah, no big surprise here. A huge chunk of that cash landed right here, in gold. Gold surged to a new all-time record high, getting close to $5,000 an ounce. It's the classic playbook, right? When political uncertainty makes everything feel shaky, investors flock to what they see as the safety of precious metals.
And if you want to put a dollar figure on that fear, get this. Over $5 billion was pulled from U.S. stock funds just this week. That's a massive amount of cash moving to the sidelines as people decided, you know what, I'm going to take some risk off the table for now.
But here's the thing. That money didn't just, disappear into a mattress. It rotated. We saw it flow out of those big high-growth tech stocks like Apple and Nvidia and flow directly into traditional safe havens, gold and silver, government bonds, and defensive stocks. So the key here is that investors were being cautious, not completely panicked. They were just repositioning their portfolios.
Now, as if the whole tariff roller coaster wasn't enough to give everyone a headache, another story was developing in the background that added a whole other layer of tension to the mix: the growing pressure on the Federal Reserve.
And this brings up a really important question for all of us as investors. Why should we even care? Why does a political fight with the central bank actually matter to your portfolio? What's the big deal? Well, it really all boils down to one word: trust. See, markets are built on the idea that the Fed makes its decisions based on economic data, not on political pressure. The moment that independence gets called into question, it creates fears of unpredictable, maybe even reckless policy moves, and that just injects a whole lot more uncertainty and volatility into the system.
All right, let's try to peel back all that political noise for a minute. Because while all the headlines were screaming about tariffs and the Fed, there were some important economic signals starting to flash just underneath the surface.
For example, just look at this. Energy and materials stocks are already up over 9% this year. Now, when the very things we use to build our economy get more expensive, that's often a classic early warning sign that broader inflation could be coming down the pike.
And that wasn't the only signal we saw. U.S. Treasury yields also jumped this week. And look, this isn't just some abstract number. It has a direct line to your wallet. When Treasury yields go up, that means rates for mortgages and car loans go up too, which can act like a brake on the whole economy.
So, after all that, the whiplash, the threats, the money moving all over the place, what's the bottom line? What should we as investors really take away from all this chaos?
I think if there's one thing to take away, it's this. In today's market, political headlines are in the driver's seat. A single comment can spark a panic, and the very next one can trigger a massive rally. This means that reacting emotionally is probably the worst thing you can do. The mistake wasn't just panic selling on Monday, it was also piling in on Friday's relief rally.
In an environment like this, having a diversified, long-term strategy is more important than ever. It helps you tune out the noise and stay focused. And that wraps up our breakdown of a truly wild week in the markets. Hey, if you found this useful for making sense of it all, do us a quick favor and hit that like button and subscribe for more explainers just like this one. Thanks so much for tuning in.